A woman in Manila sends $20 to her mother. She taps a button on her phone. 3 days later, her mother still hasn't received it. Meanwhile, a hedge fund in London moves $400 million between two accounts. It takes 11 seconds. Same planet, same idea, money moving from one place to another. And yet one takes 3 days, the other takes 11 seconds. That gap right there, that's where this story lives. Because most people think of the bank as one thing, a building, an app, a place that holds your paycheck and charges you a fee when you're $3 short. But that's just the surface. Underneath it, there's a structure so layered, so strange, and so quietly powerful that most of the people living inside it every single day have no idea it even exists. We're going to go down through it, level by level, from the little branch on your corner all the way down to the handful of rooms on Earth where the actual rules of money get decided. And by the end, you'll understand something that almost nobody stops to think about. Money isn't really a thing, it's a permission, and permission has to come from somewhere. Let's start where you already live.
Level 1, the branch. You walk into your bank, marble floors maybe, or just fluorescent lights and a line of 6 people ahead of you. A teller smiles. She asks how she can help. In your mind, she's handling your money, your actual money, the stuff you earned, sitting somewhere safe in a vault behind her. That's not what's happening. The moment your paycheck lands in that account, it stops being cash and becomes a number, a promise. The bank doesn't keep it in a box with your name on it. It lends most of it out to a guy buying a car, to a couple buying a house, to a small business trying to make payroll. Your $2,000 becomes someone else's loan before the day is even over. This is called fractional reserve banking, and it sounds complicated, but the idea is almost embarrassingly simple. Banks only have to keep a small slice of your money on hand. The rest goes out the door, working, earning interest, multiplying. Which means if everyone showed up on the same day and asked for their cash at once, the bank would not have it. Not because someone stole it, because it was never designed to sit still. This is level 1. It feels personal. It feels local. It is neither.
Level 2, the commercial system. Your branch doesn't operate alone. It's a single outpost of something much larger, a national bank with thousands of branches, millions of customers, and a balance sheet that reads more like the GDP of a small country. Here's where it gets interesting. These banks compete with each other during the day and depend on each other at night. Every evening, banks settle up. Bank A owes Bank B $40 million from the day's transactions. Bank B owes Bank A $38 million. They don't send trucks of cash back and forth. They net it out. The difference gets moved, and it happens through a system most customers will never hear the name of. This is also where the fees live, the overdraft charges, the minimum balance penalties, the interest rate spread between what the bank pays you for your savings and what it charges someone else for a loan. That spread is the entire business model. It's not complicated, it's just quiet. But even this level, banks answering to other banks, still isn't where the power sits.
Level 3, the central bank. Every commercial bank has a boss. In the US, it's the Federal Reserve. In Europe, the European Central Bank. In Japan, the Bank of Japan. Different names, same job. The central bank doesn't deal with regular people. You can't walk in and open a checking account there. Its customers are the banks themselves. And its main tool is something almost invisible: interest rates. When the Fed raises rates, it isn't flipping a switch that touches your life directly. It's changing the price banks pay to borrow money from each other overnight. But that ripple moves outward. Your mortgage rate shifts, car loans get more expensive, businesses slow their hiring. Somewhere in a diner in Ohio, a manager decides not to open that second location this year, and she has no idea that decision started in a boardroom she's never heard of. Central banks also do something that sounds almost like magic, and in a sense it is. They create money. Not by printing bills in a basement, by adding numbers to a digital ledger. In 2008 and again in 2020, central banks conjured trillions of dollars this way, buying bonds, pumping liquidity into a system that was seizing up. Where does that money come from? Nowhere. That's the honest answer. It comes from nowhere and it goes everywhere. This is the level where money stops being something that's earned and starts being something that's decided.
Level 4, the invisible pipes. Now here's where most people lose the thread completely, because this level doesn't have a building you can point to. It's plumbing, invisible plumbing that the entire global economy runs through. Remember that woman in Manila? Her $20 didn't travel in a straight line. It bounced between banks through something called a corresponding banking network, a web of relationships where Bank A trusts Bank B, who trusts Bank C, who finally has a relationship with the tiny local bank her mother uses. And the messages that tell these banks what to do, send this much from here to there, those travel through a system called SWIFT, not money. Messages. SWIFT doesn't move a single dollar. It just tells everyone else where the dollars are supposed to go. Cut a country off from SWIFT, and you don't just inconvenience it, You isolate it from the planet's financial bloodstream. It's been used as a weapon more than once. No missiles, no soldiers, just silence on a messaging network, and an entire economy starts to seize. This is the level where geography stops mattering and access starts mattering more than anything else.
Level 5, the shadow system. Below the banks you can see, there's a system almost nobody talks about at dinner. Hedge funds, private equity firms, money market funds, insurance giants moving capital in volumes that dwarf entire national budgets. It's called shadow banking, and the name isn't dramatic for the sake of it. These institutions do bank-like things, lending, borrowing, creating credit, without being banks, which means they operate with far less oversight, far less regulation, and in 2008, that gap is exactly where the fuse got lit. A firm nobody outside of finance had ever heard of, Lehman Brothers, collapsed under the weight of decisions made in this shadow layer. And within days, ripples hit a small business owner in Detroit who'd never taken out a mortgage-backed security in his life. He just needed a loan to keep his shop open, and suddenly, no one would give him one. That's the thing about shadow banking. It's disconnected enough from daily life that it feels irrelevant, right up until the moment it isn't.
Level 6, the international layer. Now zoom all the way out. Above individual central banks sits something even less visible, a handful of institutions that exist above nations entirely. The International Monetary Fund, the World Bank, the Bank for International Settlements, sometimes called half-jokingly the Central Bank for Central Banks. Based in a quiet Swiss city, most tourists skip entirely. When a country runs out of money, really runs out, the kind of crisis where it can't pay its own workers, it doesn't go to a regular bank. It goes here. And the loan comes with conditions. Cut spending, raise taxes, restructure entire industries. Argentina has lived this story more than once. Greece lived it in 2010, when its own citizens watched pensions shrink and public jobs disappear because of terms negotiated in a room they never saw. This is the level where the line between finance and sovereignty gets blurry, where a country can technically remain independent on paper, while its economic decisions are, in practice, being made somewhere else.
Level 7, the offshore world. And then there's the layer built specifically to be hard to see. Cayman Islands, Luxembourg. Delaware, of all places, a US state that's become one of the easiest spots on earth to register a company without anyone knowing who actually owns it. Trillions of dollars sit in structures designed to do one thing: separate money from the person who controls it, at least on paper. Shell companies owning shell companies owning shell companies until the actual human being at the center is buried under so much paperwork that even investigators with subpoenas struggle to reach him. This isn't automatically illegal. Plenty of it is just aggressive tax planning, technically within the lines. But it's also where the truly ugly money hides. Corruption, trafficking, sanctions evasion, dressed up in the same legal wrapping paper as a legitimate hedge fund. It's the level built on a simple, uncomfortable truth. The more money you have, the more the rules become optional. Coming back up. So picture the whole thing stacked on top of itself. You at a teller window worrying about an overdraft fee. Above you, a bank lending out money it doesn't physically have. Above that, a central bank deciding what borrowing should cost this year. Above that, invisible pipes moving trillions across borders through messages, not cash. Above that, a shadow system with almost no rules, operating at a scale that can tip economies. Above that, institutions that can rewrite a nation's budget as a condition of survival. And at the very top, a layer built specifically so nobody can see who's really there. 7 levels. And here's the part that should sit with you for a second. Most people only ever interact with level 1. They live their entire financial lives believing that's the whole system. The line at the branch, the app on their phone, the fee they got charged last Tuesday. But every decision made 2, 3, 4 levels above them, a rate hike, a policy shift, a bailout, a sanction, it all rolls downhill. It always does. It reaches the diner in Ohio. It reaches the shop in Detroit. It reaches a woman in Manila still waiting for $20 to clear. Money was never really about coins or bills. It was always about who gets to decide what a number means, and who has to live with that decision. And now you know where those decisions actually get made.